Meta is getting destroyed in after hours, so they did have an earnings release at 4 p.m. So you can see earnings were 164, missed by 22 cents, and revenue was 27.7. It actually beat by 310 million. So I suspect it's going down because of the guidance and because of the spend on the metaverse. So people, or I think it's accepted, metaverse won't generate a profit probably for another 5 or 10 years. So people really want them to rein in spending. If we look at the 5-year chart of Meta, we can see it is now below the big drop in COVID. So it looks like it hit 148 or thereabouts, and it is now down to 129. And this chart is not showing the after hours price up here of 104. So this chart is about to get uglier tomorrow morning. Let's take a look at some of the financial statements. So you can see Meta has a very low PE. So here are the forward estimates for December 2022 and 2023. You can see that PE is below 15. So this is what we like to see. The valuation is low, expectations are low, and that's when you get outperformance when everyone has given up on the stock. Now keep in mind, these numbers are probably a little high because they're probably not reflecting the latest guidance that's just issued at 4 p.m. I doubt that the algorithms, within this website are up to date on that front. So let's look at some of the financial statements. I always like to look for the kind of fundamental analysis. Let's look at the last 5 years. Solid revenue growth, 40 billion in 2017 to 117 in 2021. Some of that could have been from acquisitions. I don't know if they purchased Instagram, so you have to take into account some of that growth there. Net income, you can see pretty solid improvement in net income, and I think that's what I wanted to show here. Let's take a look at the balance sheet. On the balance sheet, you can see, look at the cash here, 41 billion here in December 2017, and then just consistently have a huge amount of cash on the balance sheet. So I think they're probably investing a lot in the business as well as repurchasing shares. So they're probably trying not to hold too much cash. I always like to look at debt. The lower the debt, the better. And if we take a look at long-term liability, zero long-term debt. And the total liabilities, around 41 billion, or in the last 12 months, 44 billion. So they could pay off those billion or that debt with the cash on hand. So always good to see. Last but not least, the cash flow statement. So we can see the net income here going from 15 up to 39 in December 2021, adding back depreciation. Their operating cash flow here you can see going from 24 up to 57 here in December 2021, and they do have a lot of CapEx spend. Keep in mind these numbers don't reflect the latest, right? So this is December 2021. This is the trailing 12 months. This probably has not been updated with, the data that came out today. So you want to build in kind of a margin of safety because things could be worse than what is actually shown here. As far as a plan of action on Meta, I would look to take advantage of that through the options market. So if I take a look at the fundamental analysis, which we just did, I think it's good. Obviously, probably need to dig into it a little deeper. And from the technical perspective, I believe that, the RSI is probably going to get hit 30 tomorrow morning. And it's, there's so much selling pressure on Meta right now. It's a 24% drop as we speak. But these option contracts, these reflect the prices as of the close. You can see, if you can see this kind of different coloration, this is where it closed. And now when it opens in the morning, depending on how it moves overnight, it should move within this. It should open up around here, 104, 105. I'm sure it's going to be different because after hours are very kind of wonky. But my goal would be to sell a put 20% below where the stock is trading, say at 10 o'clock, 10:30. As long as it continues to stay down or goes down further. If it trades down to $100 at that point in time, I'd sell an $80 put. And you can see as of the close, those puts were selling for 2 cents to 4 cents a piece, which would be $2 to $4. But my expectation is that price will go up significantly. Maybe it'll be 80 cents to $1, which would be $80 to $100. You know, I really don't know. If the stock drops down to 95, then I might sell the 75 or 70 put, and I'm going to turn it into a vertical credit spread by purchasing, you know, something in the 50 or 60 to limit the downside in case things really do get out of hand.